I've been on a YouTube hiatus, but I am now back. I wanted to talk about the crypto markets and financial markets in general, just because I felt like I have a unique enough of a view, as well as some pretty strong opinions about some interesting positions that could be coming up soon. So I thought I wanted to present them and share them with you all. But I'm really happy to be back, of course, and I do plan on making more videos as we move into the future. First of all, I do want to mention, if you haven't heard of Ticker Trends, which is my current project that I'm working on right now, Ticker Trends is a financial alternative data research platform. Basically, you can track all different types of data that relate to financial assets. So assets including stocks, cryptocurrencies, commodities. You can track all this data and find opportunities in financial markets, data from platforms like Google, SimilarWeb, Twitter, and many, many more. If you'd like to learn more about it, I highly recommend you read the Ticker Trends Medium page. We have some good articles there going over what Ticker Trends is and how it can help you with your trading. But without further ado, let's get right into the video. First, talking about the Coinbase position that I kind of want to use as a segue into just some general market interesting figures that I've been looking at. So if you didn't hear, just the other day, Coinbase announced that they received a regulatory license to operate in Bermuda. So on the Ticker Trends Twitter page, which I highly recommend you follow if you haven't already, I made a little thread about this. And essentially what happened is this Bermuda license is for Coinbase to operate a derivatives exchange offshore. Now, the reason why this is really significant is because if you look at some of the most valuable exchanges in cryptocurrency ever, such as Binance and FTX, for example, FTX at one point was said to be worth somewhere in the realm of $32 billion, while Binance was once claimed to be $300 billion market cap. So these are gigantic companies. And for context, Coinbase is only about 16 billion market cap at the present moment. So what I'm trying to show here is that these offshore derivatives exchanges, such as Binance and FTX, were significantly more successful and larger than what Coinbase is right now. And a large part of that is because Coinbase has really tried to stay above the law. They're trying to stay regulated in the US. They don't want to take too many risks. And they haven't really attacked that international market like a lot of other exchanges have. For example, Binance, which is arguably the largest cryptocurrency exchange in the world, is primarily actually based outside of the US. I believe the US branch of Binance, Binance US, is only worth around $5 billion, whereas their international business is probably worth multiple times that. So the fact that Coinbase is worth $16 billion while primarily focusing, at least I would say, on the US market, and maybe a little bit of international, but not as much as other exchanges, is already fairly significant. But the reason why this Bermuda license is very important is because when you look at the total volume of cryptocurrencies traded around the world, a majority of it is on these derivatives. Now, it kind of fluctuates over time. Sometimes spot is more has more volume than derivatives. But for example, in this chart here that you can see from Crypto Compare, the black bar is the derivatives volume, where the green bar is the spot volume. And you can see that pretty much all throughout 2022 and 2021, and even if you look prior to that, different times of trading, I mean, if you look here in June or July of 2022, the spot volume is a fraction of what the derivative volume is. So what I'm trying to show here is that derivatives has far more volume than spot trading in cryptocurrency markets. So this is a really big moneymaker for these exchanges, not to mention the fact that you can also charge more fees on derivative positions than on spot positions. So I say here, Coinbase has largely stayed out of this market, but with this Bermuda license, this essentially allows Coinbase to launch an offshore derivative exchange that competes more directly with Binance International and with the business that FTX once had with their derivatives platform, which is really what propelled them to success. So just to put this in context, Coinbase's current revenue, 93% of it is from trading commissions and fees. So if you were to substantially increase the amount of volume that was going through Coinbase trading, then they would be making significantly more money, as it's literally 93% of their revenue. So then I go a little bit into why the price of Coinbase hasn't responded to this yet. If we look at the Coinbase stock, you will see that even though they got this license to operate in Bermuda with this offshore exchange, investors don't really care about it. The main thing that I would say about this is that there is a disconnect from Wall Street and cryptocurrency traders. I think that Wall Street doesn't necessarily understand the significance of the fact that Coinbase is launching a derivatives exchange in terms of how successful it could be. And also, when you have the Coinbase name attached to a derivatives exchange, if you have Coinbase perpetual futures trading, I don't see why people would use something that could be considered less reputable, like Binance, for example, or Bybit, when they could use something that has the brand name of Coinbase for trading something like Bitcoin perpetual futures. It's a huge advantage. I think maybe the only disadvantage to using Coinbase derivatives might be that they offer less leverage. But other than that, I think it'll be a much safer trading option for a lot of cryptocurrency traders. So the main thing, as I said before, I just think that Wall Street investors don't understand how significant of news this is, and how important derivatives trading, especially offshore derivatives trading outside of the US, is for these crypto exchanges and how much value it creates for them. So that was the first thing I wanted to talk about. I think this Coinbase position is pretty interesting. Personally, I'm not buying Coinbase until I see a little bit more news about their derivatives exchange. They did say there was a leak where someone that works closely with Coinbase says that this derivatives exchange could launch within the next week or two. But honestly, I would just want to see the adoption of this derivatives exchange. I fully expect that Wall Street won't really understand what's happening with this until after it happens. So at least until after some earnings report or something. So actually this earnings report in 11 days might be something to watch out for. But primarily, I would just really look out for some strong opportunity with Coinbase in terms of outperforming its historical price, where it just kind of follows the cryptocurrency markets as a whole. This would be an opportunity for Coinbase to say our revenue is really decorrelating from cryptocurrency markets because we're growing our total business by capturing that derivatives market. So that's the first interesting trade. The second interesting trade was kind of this analysis that I made on general financial markets, basically saying that any bet against the economy right now is actually better put on the long side rather than the short side. Now, my argument with this is if you look at things like some recent banking collapses, so you had Silicon Valley Bank, you had Silvergate, you had some of these smaller cap banks that collapsed in the US, and that caused a lot of people to start to say, we're going to go into a recession. And this is the beginning where the dominoes are going to start to collapse and maybe we could have a banking crisis in the US. And then we also saw things like cryptocurrency and Bitcoin start to go up around the time when these banks started to collapse. Now, there were people making the argument that the reason why cryptocurrency was going up was because people were looking for an alternative to these risky banks. Now, in fact, I actually make the opposite argument that the reason why people are moving into cryptocurrencies during the time of these banking collapses is because they're actually betting on the fact that these banks are all going to be bailed out. Now, the main data point that I have towards this, when you look at the cryptocurrency markets, is if you look at cryptocurrency stablecoins, you look at things like USDC, BUSD, USD Tether. Those are the main three right now. BUSD is basically shutting down because of New York regulations, which you'll see a picture of on screen right now. USDC had some turbulence during the SVB collapse because they had some banking exposure to SVB. You can see here when it dropped down to something like 96 cents for a stable coin, which is absolutely insane, especially when it's associated with a brand like Coinbase. Actually, you can see here it dipped down to something like 80 cents. So essentially what I'm saying is people were seeing that all these stable coins and cryptocurrency as a whole has exposure to this risky banking system. As much as people want to act like cryptocurrency is the next generation of banking and finance, it's correlated to banking, and you can see that just from all these stable coins. that were essentially getting screwed from these smaller US banks that were collapsing. So the interesting thing about this is whenever you look at stablecoins like USDC, you see a major exodus of capital going out of it. And this is just people saying, after SVB, why would I keep my money in USDC when it has all this contagion risk? But an interesting point is when you look at USD Tether. So USD Tether is actually one of the only stable coins right now that has increased in market cap quite substantially. And when I say increased, I just mean from about the beginning of 2023. So you can see since the beginning of 2023, USDT has increased in market cap, whereas USDC has quite considerably decreased in market cap. And the same will be seen on BUSD as people are exiting it just due to the US regulatory environment right now, since they're going to be shutting down BUSD eventually anyways. But it is just quite interesting that you see USDC and BUSD having mass exodus and then USDT having an increase. So as I was saying before, I see USDT as essentially the riskiest stable coin that you could be holding in cryptocurrency, just because it is essentially the offshore stable coin. And whenever you look at these banks, like these small cap US banks that were collapsing during the SVB collapse, I think that you could say Tether is essentially the offshore version of these small cap banks. So I think that Tether is a highly, highly risky stablecoin. And the fact that people are flowing their assets from these traditionally safer stablecoins into stablecoins such as USDT and buying Bitcoin and things like that, it's essentially betting that the US government is not going to let these bank collapses ever happen. I think that's why people feel more comfortable going into USDT and other very, very high risk assets like cryptocurrencies as a whole, is because if they see the Fed bailing out these banks, then they feel confident going into risk assets because they think that if there is any major collapse in the economy, then the Fed's just going to pump more money into the economy. We'll see more inflation, and the rallies will just continue in these high risk markets. So that was essentially my viewpoint on why Bitcoin started to go up, and why cryptocurrency markets were generally pretty bullish when people started to claim that there was an incoming recession. Now, in terms of the stock market and financial markets going into a recession, I think we're still a little bit too early to fully be able to say whether that's going to happen. In terms of would I be massively longing the market right now? Not necessarily. But I also wouldn't want to miss the opportunity to have exposure to some massive inflationary event. The Fed is still trying to fight inflation. Even though they're raising interest rates, inflation is still relatively high. If we were to have a recession, let's say in the next couple of months, if the stock market just collapsed in the next couple of months, and inflation started to slow down a little bit, what would essentially end up happening is the Fed would spike, or would all of a sudden collapse interest rates to zero. So they would drop interest rates all the way to zero. The market would just rebound right away, and we'd get massive inflation again. And in that situation, I don't want to be out of the market because I think that we'd have something like a much larger rally than what we had after COVID. After COVID, we had the 50% rally just from all that inflation and all that risk capital going into the market. I think if we went into another recession now, we'd have a very similar rebound where people would just be jumping at getting back in markets just due to the fact that the Fed would probably print a ton of money. So those are my two main trading ideas, essentially just what's happening in the US economy, why people are getting into cryptocurrencies, and the interesting thing to think about with Coinbase launching their derivatives exchange. I hope you enjoyed this video, my first video back on the Crypto Advisor channel. I hope there are many more to come. Once again, check out the Ticker Trends Alternative Data Research platform. I promise you will really like it. We're going to make some major updates to it soon, and see you in the next one.